Hi, everybody, and welcome to another webinar of our series. Today, we're going to do together a lovely live trading session. We're not actually going to go ahead and trade, but we're going to go through all of the steps we have learned so far from our teachings, if you will, from our webinar series. We're going to find an instrument of choice. For example, you can clearly see I have in front of me a chart of gold. We can do quick analysis on this or any of the given instrument of our choice. And from there onwards, if we do select an instrument of choice, from there onwards, we're going to do technical analysis at the end of the day. We're going to analyze the play. We're going to use all the pre-mentioned tools that we have learned so far. For example, drawing basic support and resistance levels or trend lines, identifying chart patterns. We're going to look for what kind of information the technical indicators that we have selected are telling us, and come up with a plan on how to approach this chart right now, this instrument at this point in time, find potentially some sort of place or ways we can trade this. And again, hopefully it's going to be informative for you. We're going to do the base case scenario kind of approach for yet another live trading session, because this is again for introducing these kind of key concepts to traders that have just started trading. So this is for you to get a glimpse of how you can approach trading rather than just opening up a chart and just going long or short because you feel like it. Okay, so randomly, in a sense, that's what we are attempting to avoid doing. We're going to present you scheme, if you like, or a few steps of how you can turn your trading plan or actions into, or tilt them into a much more sophisticated kind of approach, which at the end of the day attempts to amass the highest percent of probabilities, because trading is a game of probabilities. So we're going to use this kind of available tools that we have in front of us. We're going to analyze, we're going to quantify, and at the end of the day, we're going to attempt to amass as much as high of probability we can and place a trade that can be profitable. Okay, so let's go ahead beforehand on to our, let's just say, slides. So to get a brief recap, to do a brief recap on what things we are going to look for in this webinar. What is the approach? What is the scheme? What is the process in place that we're going to follow? And this is a super simple but effective, at least from my point of view, kind of approach when it comes to judging whether to enter a position or not, at what point we're looking to enter the position, which one is the most valid area that we're going to be looking at, which is depending on the instrument, obviously, which is the price level that we're willing to enter the trade, how much are we willing to make out of it, how much we're willing to lose out of this kind of trade, with the use of all these indicators and all these chart patterns and all these technical tools that we have available at our disposal. Okay, so this is going to be a brief reintroduction of this kind of topic, this kind of webinar we've done over the past few weeks now. So again, it's falls under the umbrella of scenario construction. After we finish with this recap, we're going to go in live environment and scroll and look for potential plays. Okay, so again, this webinar is for educational purposes only. It contains no investment advice or investment recommendation. Please do your due diligence by yourselves. We're not going to tell you what to trade and how to trade that specific instrument. What we're merely attempting to do here is to provide you with the valuable information and schemes or strategies that you could deploy at your own kind of willingfulness, if you would like. So yeah, this information is no investment advice or investment recommendation. It's for educational purposes only. The redistribution of this material is strictly prohibited. So without further ado, let's get started. So this is the rationale that we're going to introduce. So the idea here is to effectively come up with an actionable trading plan of an instrument of our choice, analyze its direction, spotting possible areas of where the price action may stall or break out from. That's the use as a value in stop loss, in support and resistance levels. Assess the current strength and momentum of the trend, if there is any. Remain vigilant about any possible fundamental factors that could possibly impede or accelerate, hopefully, the trend. And finally, come to a conclusion on where a sufficiently good entry point may be, and from there onwards, how we can adjust our approach accordingly, given that new information is going to start rolling in and could possibly distort our assessment. Okay. Remember, there is no such thing as a quote unquote perfect trade. As traders, we must come to the realization that we can only find the most appropriate trade at that point in time that has the highest probability of becoming a reality. Okay, so there's no caveat here is that there is no certainty in these markets, and you're pretty much aware of that, I'm sure. Okay, so trading is a game of probabilities. What we aim to do here is to assess as many quantifiable parameters. Some are not actually that. Take them into consideration and finally deploy an actionable strategy that can be profitable. Okay, so some questions that we're going to be addressing throughout this webinar. And again, this is under the approach that we are using. So some questions that need to be addressed before you actually place a trade. Again, this is the cheat sheet that we use here. So we ask ourselves these kind of questions before we make a trade. Okay, there are plenty. I know I've seen much more than that, but if you do that time and time again, these kind of questions popping up in your mind, automatically you're looking for the answers without asking the questions. At the end of the day, you do that unconsciously from a period onwards. So you need to do your strict training, kind of repetition scenarios for quite some time after they become some sort of automatic, and you look for these kind of things instinctively, if you will. I become second nature. Okay, this is going to come after you get exposed. You expose yourself to these kind of questions, and you force yourself to answer these kind of questions before you actually place a trade. Okay, so this is the homework, in a sense, you need to do before you start placing trades. Okay, so some possible questions are: what is the primary trend of this instrument? That is, in what kind of phase of primary trend is this instrument currently found at? Okay, who is driving the price right now? Is it the bulls? Is it the bears? Is it neither? Okay, is it in consolidation mode? Who is driving the price action? Is it making higher highs and higher lows? Is it making lower highs and lower lows? Depending on the answer, you get a clear kind of direction of where the market is headed at. So how strong a trend is, that can be quantifiable, that can be measured, that can be given to you by using or looking at technical indicators. We're going to talk about which ones to look at for that kind of specific aspect we are questioning. Are we nearing the end of the trend? What kind of phase the trend is in? Are we looking at a possible reversal? Are we looking at signals of divergence from another technical indicator that tells us that, you know what, okay, the upside is done. Now it's time for a pullback, a contraction, or a reversal. Are we looking at that, or are we just blindly having an assessment that does not match what other information is killing us? Are we ignoring that information or not? We need to, in this kind of webinars, we need to take all that in and then come up with an answer that is going to be beneficial for us to trade upon. Okay, so beyond the technical analysis sphere, do we have some sort of fundamental news events coming up that are possibly going to distort or affect that specific instrument's price? Okay, we're going to keep an eye on things that are beyond our control, beyond what can be seen on charts, which are primarily concerned with technical analysis. We're going to look at the fundamental aspect of things as well. So, and put that into the equation. In regards to money management, we're going to ask ourselves, how much are we willing to place in this kind of specific trade, percentage wise, or number wise, anyways, what kind of allocation of capital we're going to use, what is the risk reward that we're looking for to get from this particular trade, how much are we willing to risk losing if the scenario that we have constructed does not go as planned and we get on the opposite side of this trade, how much are we willing to lose? By quantifying these kind of things, you can come up with a much more calibrated kind of approach. And if it goes your way, perfect. If not, you're going to take a small loss and then you're going to continue. Okay. So again, that is risk management with money management bundled together. We can also look at cyclicality of events. Is this kind of a predictable kind of pattern that has a seasonality effect to it that keeps repeating? Okay, if we spot something like this, we can capitalize upon it. There is a lot of things to look at. These are a few questions, but at the end of the day, the core four aspects are we looking for because we're doing day trading at the end of the day. Is we look at market structure, we look at momentum, we look at volatility and relative strength. Those are the four key pillars, four key aspects that we are at the end of the day looking at. If we do have access to order books, perfect. If not, unfortunately, we're going to have to deal with the information that we have in front of us. But beyond that, you get a glimpse of what is our rationale, what is our thinking process before we go ahead and trade. Okay, we need to ask these kind of questions in order to come up with a plan and with a holistic kind of point of view of what we're dealing with here. And afterwards, we're gonna go ahead and actually execute. But planning first, and then taking action. Okay, this is what we are encouraging you to do here with this kind of slide. Okay, so some available tools that we're going to be using for example, for a trend identification process is going to be possibly looking at some sort of candlestick formation or chart patterns that are easy to see, and some are super easy to see and spot. And for trend identification, we're going to use also simple, basic trend lines that are highlighting or are pointing to where the price action is going at. Maybe you know where the price action is going at. Fair enough. Is sometimes you can be clearly seen, but the usage of trend lines is for merely a supporting role. Okay, they're there for clearly mapping out where the price action is headed at this point in time. Okay, so it's merely for a visual kind of reminder of where the price action is headed. It does not guarantee you that, you know what, because this ascending trend line has not been incepted, it means that the price action is going to keep going up forever. Okay, no, that's not how it works. The trend line in place is for you to highlight that, you know, we are in a bullish kind of move. That's it. We have been in a bullish kind of move up until this point. From here onwards, anything happens. Okay, so we're looking for all these kind of parameters. We look for these basic visual illustrations in order for us to tick the boxes of all of these questions and come up with a lovely percentage of confidence, a high percentage of confidence before placing a trade. Okay, so by finding out horizontal, by using the horizontal and support resistance level, but also not only horizontal but also angled, you highlight points of friction, areas that you expect the price action to stall or break out from or find support from. Okay, these are super critical because they give us indirectly some sort of target areas for either to enter or exit the position. So I like to use support and resistance levels. Pretty much everyone does. But how you use them makes the difference. Okay, so technical indicators are going to be used in this kind of webinar as well. We're going to be gauging or judging what kind of momentum and volatility that instrument has, and you're going to see which ones tell you what and whether they are converging the same information or not. Also, we're going to look at fundamental news releases to assess what kind of impact these kind of events will have. We're going to use take profit and stop loss orders in order to keep ourselves kind of binded to what we say and what we do. Also, maximize the gains and, more importantly, minimize the losses of each and every play we make. Money management, that depends ultimately on you, what kind of funds you're willing to allocate on this kind of trade. Basic rule of thumb, 10% to each trade is a general kind of not law but rule, no basic observation that pretty much everyone uses. You might be using 30% or 40% depending on your risk tolerance, but for an early trader or an early beginner, small bits of allocations is the best way to go if you like. Okay, lastly, we're going to use some instrument correlation to assess also potential impact to see, for example, if the dollar is rising, what would you expect to see happening in gold? We're going to keep an eye on it and vice versa. So, for example, if the dollar is making move to the north, that means it's strengthening. Most likely, you're going to see gold moving the opposite direction because they do have a negative correlation. It's not a perfect negative correlation, but there is a contrasting aspect of behavior between these two instruments, or bond yields with gold, etc. Okay. So let's jump onto a live environment to see what do we have. If we do have any available plays that we can use, let's do, what is this? This is gold daily chart. And we've done this on the prior webinar, but we can do in this webinar as well. If you have any sort of preference, guys, please let me know in the chat. If not, I'm just going to go randomly choose something to look at. Let's go Aussie dollar. Why not? Okay. So is the Australian dollar against the United States dollar. We're talking about an FX pair here. Let's go ahead and start our thinking process, our analysis. What do we see here? Now, if you look at it from, I'm merely outlining what I'm actually seeing here. You might be seeing different things. Please let me know in the chat. From looking at this chart right here, I see that this area can be branded as some sort of a consolidation zone. Okay, if you would like. Okay. From a medium to kind of long-term point of view, we're talking about from last year, so a year's time. We've seen Aussie dollar kind of being stuck between the around 0.69 and 0.64 or 63 areas. But yeah, from a much shorter kind of time frame, let's focus on this kind of move specifically right here. Okay, we see a descending trend line. We can draw a descending trend line indicating that the Aussie is weakening kind of substantially against the United States dollar, and this has been since the start of October, so the past 2 months now. We've seen an 8% loss or retracement from the Aussie against the dollar, mainly because we have seen much more recent strength of the dollar over these times. But zooming out, you can clearly see that it has been bottoming out around these kind of levels or areas we have highlighted beforehand. Okay, so you could use, for example, maybe this one. I'm gonna ignore this kind of peak. When you have 1, 2, 3, 4 touches failing to break above these, what is it? Let's just round it up to 6, 9. Okay. Between this area and for some reason the Aussie is finding support somewhere in here. We're roughly talking here, roughly speaking here. This is the area. Let's go 6.5, much higher. Where is it? Okay. So roughly speaking, over the past, well, 2 years now, Aussie dollar has been stuck within this kind of range. And as we mentioned last day during the last webinar, we're not looking at specific levels, we're looking at specific areas. So instead of using this, we can do something like here, like a lovely rectangle. And we can use this as an area of, I know it's a large area, but can use it as a possible resistance. Okay, maybe I do like this. Okay, but you get the point. Okay, price action is failing to break above this kind of level. Similarly, we can do the same thing for The support level, support area, maybe this one is here. Okay, so we see price action falling. No, sorry, falling towards this kind of area, these kind of levels, but ultimately failing to break below. Maybe with this kind of push, we're going to see a break below this kind of area. But for the time being, this is what we see over the past 2 year time. So we're talking about a long-term frame. So we're going to do a time frame analysis. Obviously, you can clearly see me doing this right now. So we're looking at it from a longer term point of view, and then we zoom in and see what the fine nitty-gritty details are. Okay. Um, let's go from a much shorter time frame. This is again same kind of picture. So potential strategy, a simple, super simple strategy without looking pretty much anything else is by, for example, looking at this kind of chart, and we saw once if the price action fell to this area, rebounded strongly up to this area, it fell kind of sharply as well. So what we do, a simple strategy without looking pretty much anything else, which is not something we recommend or should anyone do, unless you know how to do this perfectly, is, for example, go long at the end when you see the rebound from this kind of area, go long and have a target up there. Okay, so you're willing in a sense to risk if the price action is doing this. Okay, maybe it falls down here. If it recovers, you can go long here, capitalize on the upside, and have a target up there. It's going to be a much more long-term point of view, holding kind of trade, if you will like. So going long at the bottom where the price action finds support and having your exit target near the top where the resistance is, or complete opposite. Once the price action is up there, so enter a short position, and for example, I should have left the drawings. For example, fails the price action fails to break above this. Let me redraw the whole thing. So it does something like this. We just say, okay, let's shift upwards. Okay, fails to break above it. Okay, whenever the price action comes down here, okay, place a short order, excuse me, capitalize on the downside. So let me adjust this in order to see exactly what I mean by this. Okay, so long position or something like this. Okay, after the price action has found support, ideally once here and once here, okay, twice, so rebounding from the super lows here, which is what, 2 year low, 2 year plus low. Okay, so if the price action finds support here and makes a higher low near this kind of area, once, twice, 3 times, around somewhere in here, then you go place a long order somewhere in here. Okay, and you expect and you have a target to be reached up there, around the 69 area, 0.69. And whenever the price action, if the price action fails to break above it and retraces once again, then you go short and have the target down here where the prior support level was. Okay, so simple, super simple strategy without using pretty much anything else. So let's go ahead on a much shorter time frame to see what else we can do with this kind of information right here. Okay, so let's draw some lovely support and resistance levels besides this. So currently we are reaching that kind of area where we have found support from. Let's go on a weekly basis. Maybe it's going to be seen lovely. Okay, much nicer, but still. So confirmation is there. Okay, so for the time being, since October, we have seen price action of the Aussie against the dollar weakening. Okay, moving to the downside. That means the Aussie is weaker, is getting weaker against the United States dollar. Where possible resistance areas can be found after possibly we see a reversal or a rebound, because we could reasonably expect that after these kind of events have taken place. Now, one is going to be somewhere in here. It's going to be a resistance, so I'm going to mark it as red. Another one is going to be up there, and possibly the other one is going to be right at this former lower high. So let me mark it to see what I mean by lower high. So this is the high, this is the lower low, lower high, lower low, lower high, lower low. So this is the basic definition of a descending kind of instrument or descending kind of price action. Okay, so lower highs and lower lows. Okay, so looking at this, our assessment is from a shorter kind of time frame. Our assessment is that this instrument is moving on a downwards kind of fashion. No doubt about it, at least from October downwards. But we're going to look at other indications. So a bias in this kind of scenario is going to be bearish, obviously. You can clearly see that from the lower highs and lower lows. You can clearly see that from the RSI, which is below the 50 threshold and is nearing what the 35 area. That means the bears are in control. Most likely they're going to push the price action to lower ground. AEDX, the negative DI, the directional index, is on top of the positive DI. You can clearly see that right here. So, okay, negative DI has a value of 26, positive DI has a value of 12, so almost double that. ADX is at 35, that means a moderately or a quick pace kind of momentum in favor of, in this kind of case, the bears, because the positive DI is higher than the negative DI. That means the bears are in control and their move is sufficiently strong, then could push price action to lower ground. What about the MACD? MACD below, we can clearly see both the MACD line and the signal line below the threshold. Okay, so in negative kind of territory, confirms that the negative momentum is currently in place. That means the bears momentum is taking over, has taken over the bulls kind of intense or reign. Okay. We have seen also the crossover of the two lines. Below that, histogram is marking negative kind of values, mainly because the MACD line is below the signal line after this kind of crossover. So we have a confluence of indications and basic chart identification purposes. We see that the bears are actually in control and they're driving the price action with enough strength to lower ground. You can also see that from the crossover of the short-term moving average, which is the black line below the long-term moving average in this kind of case, which is the 26 EMA. The short one is the 12. You can clearly see that those two right here. So this is what we call a bearish crossover or a death cross. Another confirmation that the bears are in control. Also, the fact that the price action is failing to break, okay, above these kind of 12 EMA is another indication that the bears are in control. So we're looking for the confirmation that the price action is going to stay below this 12 period EMA, which the 12 period EMA is acting currently, can act as a resistance area for a potential rebound for the price action. So for the time being, our assessment is obviously bearish, but okay, and this is something that we need to pay close attention to. If you zoom out, you're going to see that over the past, we have seen prices rebounding from these kind of areas, no breaks below it. Maybe we're going to see enough momentum pushing Aussie to lower ground, but we cannot hide the fact or avoid looking at this past price action where we have seen prices rebounding from this kind of level for some reason. Okay, I'm not quite sure what's the reason why we've seen rebounds from these kind of levels. I have no recollection of what has happened in October of 23 in regards to the Australian dollar. Maybe we can go back and look, but at the end of the day, we have to mark this area and highlight this area as a potential reversal kind of zone. Okay. Now, whether the price action is going to reverse its course here or here or here, nobody knows. We're going to see and we're going to keep track of price action. Okay. So our assessment is obviously bearish. What we also have to point out is that the RSI is recording a lovely divergence. Another thing that we cannot overlook. Okay, what do we mean by divergence? Okay, let's explain that simply. Okay, so as we just highlighted with this lovely trend line, descending trend line, we see price action making lower highs. This is the lower high and lower lows, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, maybe somewhere in here. Okay, so maybe we're gonna get some sort of pushback up until this level. Okay, who knows? Maybe it's gonna be lower than that. Maybe it's gonna be here. Okay, we're not gonna speculate. Actually, we do. We will, but yeah, for the time being, yeah, we are waiting for this. What I mean to say is that this is a clear downwards moving instrument. Okay, lower highs and lower lows. However, if you look at the price action, if you look at the readings of the RSI below the chart, these are not recording the same thing. Okay, lower highs and lower lows, lower highs and lower lows. Yes, yes, yes. What is the RSI telling me? At this point in time, we've seen high. Maybe here was the lower low, a fresh lower low, and then we had a higher low, coincides. Okay, this one was not a higher, it's not a lower low. Okay, this was a higher low recorded in the RSI reading. Okay, this one, this value at this point in time, RSI value was at 30. Here at this lower low of the price action, RSI had a bottoming out value of 33. So that's a higher low on the RSI, whereas the price action is making a lower low. Okay, that is what we call divergence. You can clearly see that it has continued doing that. So if this is the new higher, a lower high, okay, this kind of area, we've seen a lower high. Okay, that's not a problem. But price action once again records a lower high, excuse me, a lower low at this level, whereas the RSI bottomed out at the same level. That means that there is enough buying pressure from the bulls that is not allowing or is capping, if you will like, the fall of prices at a much more fast pace, and the pushing back against the bears. Okay, so that is something that we need to pay close attention to. This divergence is what we are looking for if we want to do a reversal kind of play. If we want to play this on the opposite side rather than going with the trend, it's not something that you should do frequently, but once these kind of divergences come in play or rise, we need to pay close attention to. Okay, so this is something that we do need to pay a close attention to. Okay, so from here onwards, we're going to do a scenario here. If we see the price action finding bottom here, support here, and the RSI jumping, okay, maybe I'm going to be eager to start going along here. Okay, if the price action forms a definitive low here and heads on to make a fresh high with the RSI, the same kind of thing can be translated with price action moving something like this and breaking above the descending trend line. So a break around this kind of area is something that I'm going to be looking closely at if I want to go long, okay, and play this kind of reversal that we have talked about, that we have explained at the earlier stages of this kind of webinar, okay? Though this is a hypothetical scenario. Now, if the price action, if the RSI just, let me erase this. Now, if the RSI does not perk up, does not move upwards, or the price action does not rebound from this kind of level and continues to fall, and we mark a fresh, okay, low from the from the price action from the RSI. If the RSI falls below the 30, okay, threshold, okay, goes below the 30, then most likely we're going to see a move like this. Okay, so we're going to see price action entering this kind of area once again. But at the end of the day, here, the only thing I can come up with is having um, a bias for a reversal here. Okay, I'm having high confidence that this price action is going to rebound from this kind of level. If the evidence is there and if I see the things I want to see, then I'm going to place a trade. If not, if I see a plummeting of the RSI below the 30 and the ADX picks up and goes between, let's just say 45 to 50, negative DI stays on top of positive DI, and the MACD line even records much more negative kind of values, then I'm going to be going short. I'm going to be looking for a break below this kind of area, and I'm going to be awaiting to see support somewhere in here. If this support level breaks as well, now we are into territory last seen before in when? February of 2020, March of 2020, which was what? The beginning of lockdowns after for the COVID-19 pandemic. So we're gonna probably reach these kind of levels if the trend, if the bears kind of momentum strengthens and price action accelerates over the next few months. Okay, this is not going to be on a short term. You're not going to see, let's just say, what from here, another 9% drop within, I don't know, a week. No, it's probably going to take much more longer. It's going to have some sort of pullbacks and rebounds, maybe something like this, over the horizon of what. No, I don't think it's going to be within the next 9 months. Probably it's going to be much sooner if the momentum is strong enough. But yeah, from a long-term point of view, this is some sort of expectation. What do we see here? Much more shorter time frame. But yeah, this is one way to move towards this. Okay, so what we've done here is we've drawn this lovely trend line to point out where the short-term kind of trend is headed at. We have used support and resistance levels to highlight potential areas of friction. Okay, in this kind of case, this is a long range of possible support that can take place. We have also made a scenario of what can happen in the future. We have looked at technical indicators which are all aligning up, but the RSI is telling us that the divergence is at bay or has occurred. So we're going to be looking at that and we're going to be awaiting for a rebound. So yeah, primarily we are bearish on this, but we're going to see further. We're going to need to see further evidence for us to change our mind and go ahead and place a long order. For example, if we see a break above that ascending trend line, if we see price action breaking above the 12 period EMA, if we see the RSI forming a bottom and heading closer to the 50 kind of level or area, if the positive DI crosses over and above the negative DI and the ADX stays above 40 or 45, so the MACD and the signal line heading above the threshold. Those are going to be the things that I need to see before I go long. So for the time being, those are a lot of factors. Maybe they can come into fruition, but for the time being, we do hold a bearish kind of outlook on this. Okay, so a much shorter kind of time frame. We're going to have a bias for possibly going short here immediately. I don't know about immediately, but possibly in this kind of area, you can go short, have a target somewhere in here and risking this. Okay. So from my point of view, risk reward ratio 2.83 It's okay. It's very nice. 2.5, much more realistic, I think. So if we go back in time, maybe for me to have a target, it's gonna be, let's go further back, go 4 hour, potential area of exit, maybe somewhere in here. Yeah, this will do. Okay, a little bit more, a little bit less is going to be made when we have this kind of target. So yeah, so risk reward ratio of 2.3. Okay, I'm willing to, if you like, lose what 0.5% in order to get 1.37. Decent enough. Can do better than that if the price action does go your way and you see fast price acceleration and to the downside and the bears retake control and push prices to lower ground. Maybe I'm gonna have a trailing take profit, but also trailing stop loss. Maybe I'm gonna drag it down here and have to adjust my position accordingly. So risking 0.5% in order to get 2.2. Much more nicer. But yeah, for the time being, this is a potential play that we can come up with, or an assessment that we can come up with in regards to the Aussie against the dollar. Okay, so guys, I think we're running out of time. If you do have questions, please send them through right now. If not, we're gonna keep this session short, and we can hopefully catch you on to next week's webinar for another live training session. For the time being, I don't see any questions, so I'm gonna end this one right here. Take care, guys. Ciao. Thank you. Bye bye.